Look who is here. His name is Bob Dole. He used to manage $1 trillion, didn't you?
Yes, and the firm I'm working for now is $1 trillion.
So I can still call you the trillion-dollar man.
I guess you can get away with it, Stuart.
Well, but then, in which case, sir, you have some clout on this program.
We try.
Okay. The interest rates are going to go up, very probably, on Wednesday. But you say that doesn't matter. That's not going to hurt stocks this time around. Make your case.
First of all, everybody knows it, so it's in the market. Second of all, I would make the case the Fed is behind the curve, and this is going to be the third time in a decade they've raised rates. Yep. The question is, what will they say, and what will be the accelerated pace of rate rises from here? That could eventually be damaging to the stock market, Stuart, but not yet.
But not this week.
Correct.
The Fed is moving because they see the economy expanding. Is that accurate?
Yeah, their targets have been a little more growth, a little more employment, and a little more inflation, and they're getting all three.
And that's what investors have been saying.
Exactly.
Since the election, they see growth down the road.
Yes.
Bingo, here we go. Now, on this program, late last week, we had Trump's senior economic advisor, Gary Cohn. He told us about tax cuts. Just roll that tape for a second.
We will continue to work on tax reform till we get it done. It is a stated objective of the president to get tax reform done this year. We're actually prepared to work through the recess. We're prepared not to go on recess. We're prepared to stay here and work on it. But we can work on it in the fall. We need to get it done this calendar year.
Well, is that an absolute must? You gotta get it done this year.
Well, the markets have responded to a better economy, but they've all responded to, we're gonna get some tax cuts. So eventually it has to happen. I love the style. We're happy to work through the recess. Wouldn't that be a change in Washington, D.C.?
But it's got to be this year. Or what happens if it's not this year?
I don't think the world's going to fall apart, but it's got to be early next year. There's still some thinking it's going to be done in August. I think no way, shape, or form.
I'm taking a lot of criticism from our viewers who say you're banging the table too much about a tax cut. You're just self-interested. I say that a tax cut is vitally necessary to get growth in the future and prosperity in the future. Are you with me on this?
Totally. We have the highest marginal corporate tax rate in the world, Stuart, as you know. We've got to get competitive. That's just one place, and we need tax simplification so people can understand it.
If we get tax reform this year, I don't know when, but if it's this year, are we looking at 3%, maybe 4% growth next year? Can we do that?
We have a shot for several quarters. 4 is a stretch, even with the tax cuts, in my view. But you know what? It'd be great to grow for 3 for a while. We've grown at 2 for how many years now? I'm tired of 2. You probably are too. Let's try 3.
Are you surprised this morning that we opened up dead flat? When you've got a rate increase, a Dutch election, you've got CBO on Obamacare. I see them all as negatives, and yet we're dead flat.
You know, the market's responding to the fact the economy's getting a little better, and so are earnings, and so it's going to take some more hitting it over the head to get it to go down.
Interesting that a man who manages $1 trillion is banging the table for a tax cut and more gains to come for the market.
Helps everybody, Stuart.
Yes, it does. Bob Dole, what a pleasure to meet you in the flesh.
Great to see you.
Thanks, sir. Thank you.